Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6, 2024, and we're diving into the first quarter fiscal 2025 earnings report of Jack Henry & Associates, a leading financial technology provider. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Jack Henry has been a key player in the fintech space, and their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Jack Henry reported a GAAP revenue increase of 5.2% for the first quarter. John, what are the key drivers behind this growth?
The revenue growth was primarily driven by a 6.6% increase in processing revenue and a 4.2% increase in services and support. The company has effectively capitalized on the growth in data processing and hosting, as well as card and transaction revenues.
And what about profitability? The operating income saw a significant increase.
Indeed, GAAP operating income rose by 14%, which is quite impressive. This was supported by a decrease in selling, general, and administrative expenses, which fell by 15.5%, and a strategic focus on cost management.
Operational efficiencies and future outlook. John, can you elaborate on Jack Henry's operational efficiencies and their future outlook?
Sure, the operating margin improved to 25.2%, reflecting their efficient cost management and strategic investments in technology. Research and development expenses increased by 7.6%, indicating a commitment to innovation. The company has provided strong guidance for the full fiscal year, expecting revenue between $2.369 billion and $2.391 billion.
That's promising. How does this align with their strategic goals?
Jack Henry is focused on enhancing their fintech ecosystem, which is evident from their increased R&D spending. They are also leveraging their strong sales pipeline, as highlighted by their CEO, Greg Adelson, to drive future growth.
Financial health and risk management. Let's talk about Jack Henry's financial health. They've reduced their debt significantly. What does this mean for the company?
Reducing debt by $105 million is a strong move, improving their financial flexibility. Their stockholders' equity increased by 16.0%, which is a positive sign of financial stability. However, the decrease in deferred revenue by 4.1% could indicate some challenges in future revenue recognition.
And how is their cash flow situation?
They generated $116.9 million in net cash from operating activities, which is robust. This positions them well to invest in growth opportunities and manage any potential risks.
CFO insights. What insights did the leadership provide in this report?
CEO Greg Adelson highlighted a record sales attainment for Q1 and an all-time high sales pipeline, which is encouraging. CFO Mimi Carsley mentioned that their performance was aligned with expectations, with private cloud revenue growing over 11% and processing services contributing significantly to revenue growth.
It seems like they are on a solid path forward.
Absolutely. Their focus on culture, service, and innovation is paying off, and they are well positioned to capitalize on future opportunities.
Key takeaways. To wrap up, Jack Henry & Associates has delivered a strong first quarter with notable revenue and operating income growth. Their strategic focus on innovation and cost management is evident, and they have a promising outlook for the rest of the fiscal year. John, any final thoughts?
Jack Henry is demonstrating resilience and strategic foresight. Their ability to reduce debt and maintain strong cash flow is commendable. Investors should keep an eye on their continued innovation and market expansion.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Jack Henry's performance in the comments below.